Hi, everybody. Thank you for coming today. So the topic today is the year in review and the year ahead in Ethereum. We have a panel of John Wolpert and Haseeb Qureshi, and it's going to be moderated by Evan Van Ness. So I will go ahead and kick it over to Evan.
Great. So I guess let's start with intros. Like I imagine that like a lot of people are probably just listening to this, and so I think always like starting with intros when and getting the voice with the bio, like brief bio is good. So I'm Evan Van Ness. I have a newsletter called Week in Ethereum News. I work for ConsenSys, where I'm a venture partner at the in the venture wing. So that's me.
I'm Haseeb Qureshi. I am a managing partner at a crypto venture firm called Dragonfly Capital. Before that, I was at another firm called Metastable Capital, which is also a crypto investment firm. And before that, I was an entrepreneur and engineer in the space.
I'm John Wolpert. I built that thing called Hyperledger Fabric back in 2015 in the early days of private blockchain, and then realized that public blockchain was really, or the mainnet as we call it, is really the thing, and went to work for Joe Lubin. I'm the group executive for a new enterprise mainnet line that's coming out from the company.
Awesome. So let's start with the year in review. I'm reminded of the story, which I think is in one of Nassim Taleb's books, about the person who could predict the past perfectly. And of course, like when you first think that you like predict the past, that's so ridiculous. And so you try to go back and analyze what actually happened and what was important, and it's always harder than you thought. And it's like somebody who's writing, my own year in Ethereum 2019 piece right now. I can tell you it is always harder than it seems, and like coming up with the narratives that properly encapsulates is hard. So with that in mind, like I guess we'll go with like a pretty broad question to start, which is like, year in review. Like, what was the most important trend or thing or event or development that mattered for Ethereum? Not from an enterprise perspective. Like we'll talk about that later, I suppose, but just like for Ethereum as a whole.
Evan, can I actually ask you to like name what a few of the things are, like a few of the big themes that you were discussing in your article, just to like kind of get the juices flowing for us?
Yeah, I mean, one of course is like the rise of DeFi. It's like figuring out where the well, I was going to say, like, of course, we all like it seems like DeFi has been around forever, but actually, that is very much a 2019 thing. The shift to mainnet for enterprise seems as well like an ongoing beginning trend. There's of course all the stuff about like what is happening with layer 2 and ETH2 and developer tooling.
Yeah. Okay. So let me run with the DeFi and the layer two, because I think those are two things I can speak to pretty well. So 2019 was definitely the year that DeFi came into its own. I think last year it was really kind of Maker was the only thing that really seemed to be working, and everything else was just sort of just a glint in somebody's eye. And 2019 we saw Compound, DYDX, Maker more than 2x in its AUM, and the total loans originated, I think, also doubled from 300 million to 600 million. So we've just seen really, really massive growth and an explosion of different kinds of products and different approaches to building the sorts of things that people want. That said, it's still clearly very, very early. All this stuff is very immature, and we're seeing rapid iteration between cycles of products. So like Compound V1 was just really, really broken compared to Compound V2, where in Compound V1, if you want to take out a loan against some crypto collateral, every form of crypto collateral was treated the same, which is just kind of insane. Like literally a stable coin and ETH are considered to be equivalently high quality collateral, where now in Compound V2, every form of collateral that you put into the system can have a different risk profile that modulates how much collateral you need to take out an equivalent loan. So one, we're just seeing a lot more sophistication in these products. We're seeing a lot more variety in these products. But I think probably, looking forward into 2020, we'll start to see, one, collateralization rates go down. So, in Maker, for example, you need to over collateralize the CDP, which is like the principal of the loan, or sorry, the collateral for the loan. You need to over collateralize it by 150%, which is really dramatic. In normal finance, almost nothing is collateralized to 150%. And the reason why it's so over collateralized is that the collateral is really volatile, and it's really hard to liquidate these, because they have to go into these on-chain auctions, which just don't move that quickly. So I think we'll start to see more efficiency in these liquidations, and see higher quality collateral being used more and more. Right now, it's still mostly ETH and then occasionally stable coins, but I think we'll start to see more different kinds of assets being used to take out these on-chain loans. And the second thing I think we'll start to see really come into their own are synthetic assets. So today, the only synthetic asset that's really used is synthetic US dollar, which is DAI. DAI is the biggest synthetic asset we have today on Ethereum. But I think there's going to be more. I think that the US dollar is really just the very, very beginning. And it appeals right now to traders, because traders need a sort of reserve currency for trading pairs. But eventually, and I think we're starting to crack this with better wallets and better user onboarding experiences, there's a lot of demand for financial products around the world beyond just the US dollar, and I think somebody is going to start cracking this nut and really using the public Ethereum mainnet as a way to democratize access to different kinds of financial assets beyond just the US dollar. So that's, I think, going to be the big themes for DeFi in 2020. So with that, I'll cede my time and kick it over to you, John.
It's an apropos way of saying it, especially today, where a lot of people are reserving their time and granting them. That's a phrase that'll be said a lot today on the news. I think I reserve my time. So yeah. So oddly, I am on the advisory board of a bank, a really cool core banking company called Neocova. So it's not that I'm not a banking finance person per se. I did get a B in finance, but it was from Jim Angel at Georgetown, so kind of cut the difference. Actually, I was talking with him not too long ago in New York, or in DC, and we had this fascinating conversation about cryptocurrency and that sort of thing. And he's fascinated by it. And at the end of the conversation, it was about an hour long. I said, Jim, you gave me a B. And he said, oh, but I'm not really. I'm going to say that I'm not a finance guy. And there's so many great finance guys, like present company, that I stay far away from it. I'm the fix the internet guy. So for me, DeFi to me looks like whales loaning each other crypto so that they can buy their lambda without selling crypto. And somehow systemic risk was just not fun enough in 2008. So I'm sure it's awesome, but I don't get it, and that's all right, because I don't need to. There's a lot of people that do. And I don't, that's me being funny, but I do respect the space. So DeFi is cool. It's certainly, I think, and it's a great example of how the path to the future for Ethereum and for blockchain and really all emerging technologies I've ever worked on, it doesn't look like a path. It's really a bunch of stepping stones in a stream. And the trick is not to get too wet on the way over the river. And DeFi is one of those stepping stones, right? We've got to look at that, and we've got to. There's a play there. There was a play for ICOs previously, and synthetic assets, whatever those are, sounds awesome. But for me, it's about the fact that the mainnet is the thing we've been waiting for, and I've been waiting for 5 years to be able to tell this story, which is distributed systems always need a common frame of reference in order for them to work together. If you have a state machine over here and a state machine over there, and they're run by different parties, laws of physics say you need a common frame of reference in order for those two things to work together without causing a giant mess. So to me, the mainnet is not a CRUD layer. It's not even, to me, a token thing. Sure, tokens are state, are composed of data and logic and state, but to me, it's the mainnet is middleware. And this, in thinking of it as middleware, is how you get to the future in 2020, which is enterprise mainnet. So I'm not going to just predict, I'm going to make sure it happens, that in 2020, enterprises start going, oh yeah, I can use the mainnet as middleware because I'm not going to put any data or business logic that's going to give away my position or my relationships or my strategies to anyone else, given that all blockchains are digital nudist colonies, including private blockchains. They're just digital nudist colonies on private beaches, right? But if you're on that beach, you get to see everybody, right? So, blockchain's not good at not being transparent. So don't put things that you would rather not people know on any kind of blockchain, but rather use this always on state machine as a way of entangling the data and business logic in different state machines run by different parties, such that you and I know for sure that we have the same data and that we're running the same business logic without putting that on some new threat surface, blockchain or otherwise. And taking the profit motive out of that kind of middleware, MQ series and other types of middlewares that do this, you wind up with the magic bus, a magic message bus. And it's a very boring way of thinking about blockchain. But I think that the 2019 was the beginning of boring. 2020 is boring is beautiful. Boring is where we get to the future. And when nobody's talking about blockchain anymore, that's when we're all going to be making a lot of money building things that use blockchain.
So I was joking with someone recently, and I said, if you want to kill Ethereum, then just label it as middleware. And
I think if Ethereum wants to survive, you label it as middleware because it's actually useful for that.
yeah, I mean, I agree with your analogy. I just think as a buzzword and as a hype, certainly there is none there. I mean, nobody gets excited about middleware, and in fact, like even like enterprises, sometimes it's as soon as it gets called middleware, you can't sell it to them, right?
Well, I mean, if you think about it, in 1998, when the first time I had this kind of a game played, we got 2 million Java developers addicted to Java in the space of 2 or 3 years. And I think most people think of it as pretty boring stuff. But you had to hold the Java 1 conference in Javits Center because 35,000 developers showed up. I think that'd be a good day for us.
So speaking of middleware, the other I think theme of 2019 has been the story of layer 2, which is sort of like the ETH mainnet native form of middleware. And one thing that I've been thinking a lot lately is about, back in, I think it was 2017 when the plasma paper first came out, or was it 2018? It must have been 2017.
It was July 2017. Yeah.
2017, yeah. So I remember, plasma being just like this, like the centerpiece of the Ethereum scaling story. And this year, I feel like has kind of become, on the layer 2 side, something of a murder mystery of what the hell happened to plasma. It just kind of disappeared, and nobody really knows exactly how it died. And it's been replaced by these 2 new concepts, which have been blessed by Vitalik, which are zero knowledge rollups and optimistic rollups. They're a general category of things called rollups. And it might not be worth actually going into all the details of like what exactly they do and don't put on chain and what are the major differences. But the main problem, as far as I can tell, that sort of got people to never quite rally around Plasma in the way that they originally imagined that they would, was the fact that Plasma just had all these edge cases of like exit games and mass exits and operators behaving maliciously that made nobody really that comfortable that in the worst cases Plasma would end well. Like any kind of Plasma chain, if either one, in order to make those things easy, you had to make the Plasma chain really complex, or you make the Plasma chain really simple, and then you have these like horrible, disgusting edge cases. And nobody was very happy with any of the designs. There ended up being like 30, 40 different approaches to how to build a Plasma chain. And now we have these new iterations called optimistic rollup and zero knowledge rollup. Zero knowledge rollup uses zero knowledge proofs in order to simplify a lot of the trust model. So you have to trust the operator much, much less than you would in a Plasma chain. And same with optimistic rollup. Optimistic rollup, it sort of goes back to this classic thing in security of of using fraud proofs versus using, positive proofs of correctness. And zero knowledge rollups use positive proofs of correctness and zero knowledge proofs, meaning that the computation was performed correctly. And optimistic rollups say, look, we're gonna put all the data out there. You can redo the computation. If we're wrong, you can prove that we're wrong, and then you can take our money. So two different approaches to trying to prove that the operator is behaving well. So I think these two designs are really great improvements over what we originally were looking at with Plasma. However, neither of them are actually live today. So I think Zero Knowledge Rollup has a ZK Sync as like a testnet demo that's live. Optimistic Rollup, I think at DevCon, Uniswap had this beautiful demo, I think they called Unipig, that allowed you to take a look at what it would look like to interact with Uniswap over an optimistic rollup chain. And both of them show just like beautiful 500 millisecond latency, where it looks like you're interacting with a normal website that's just like, slightly slower than what you'd otherwise expect. And this feels to me like, okay, we finally have gotten somewhere. There seems to be a there when it comes to layer 2. So I would be surprised if 2020 is not the year that we see at least the first real applications being deployed on top of robust layer 2s that people can finally live with.
Haseeb, would you say? I mean, I like that perspective, and I like the idea of a Plasma, or that we're evolving these kinds of things, state channels, et cetera, et cetera. Call them layer 2. I'm an old timer. I call it layer 7, right? And I call it the internet. And you use the right tool for the right job. So I'm going to use SAP for my state machine if I'm an enterprise, and I'm going to use any number of things if I'm a game developer. And I'm not going to delude myself into thinking that Ethereum is the world computer. It might be the world's computer, but if anybody thinks that we're going to run all the compute reads and writes for real-time applications on some kind of a singleton state machine, even Cassandra can't do that with all the shards in the world and no need for ConsenSys. So I'm not sure how we ever get there. But I think, again, that it's a pretty good connector because it can scale to it on the numbers, and you can scale it for that. If you say, look, I got this state machine, I've got this machine for this kind of job, I've got this application layer, I've got all my Web 2 stuff. In fact, I don't have to be a Web 3 person. I can just be a web person. And now I've got a new toolkit to use without throwing out all my other stuff, right? And I wonder if we aren't preoccupied too much with why don't we start with, I have a function and I'm returning Boolean true, and I needed to get into your function, and I need to do that without having that come back on me like a bad torpedo in the form of a deadlock, right? And I need some kind of common frame of reference to make sure that doesn't happen. And I need to use that common frame of reference in such a way that I'm not giving away to my competitors or anybody else the cadence of my activity, my relationships. Nobody should even be aware I'm doing something on that frame of reference. And I think that's what we're going to get to in 2020 is how do you use the mainnet in such a way that you're leaving no breadcrumbs for somebody to analyze and determine what you're doing. And yet you are solving some of these core distributed systems problems. Once we've got that, then hey, all for it. Let's worry about how one coin doesn't get devalued against another coin or something like that. That's just a higher level of basic compute. But it seems like we go straight to that and we get preoccupied with, whether it's an atomic swap or whether it's staking or all these other things. I'm like, no, let's just figure out how functions work together across multiple state machines.
What do you see the developments in 2020 on that being, John?
I think the magic bus is pulling out of the bus station right now, and mainnet 2020 is going to be a big campaign, and a lot of companies are going to get behind it in the early. I'm not predicting that. I'm promising it because I'm part of that. And yeah, by the end of the year, we want to do the same thing we did in 2015, when nobody would say blockchain. It was a verboten subject. My predecessor at IBM, Paul Brody, famously said blockchain 4 months too soon. Now he's at E&Y and doing very well, I might add. It's got a great development team around blockchain. It's profoundly good work being done, both on the science and on the engineering. But in those days, he couldn't say blockchain. He was brave enough to say blockchain. He had trouble. 4 or 5 months later, Jerry Cuomo and I could say it all day long because we'd gotten everybody around the idea that blockchain's not Bitcoin, and all the executives started saying that, and it was okay suddenly. Today, we've got to do the same thing. We've got to say mainnet is okay. We can use it in a safe way that's even more secure because you're not going to lose surveillance resistance in your attempt to get tamper resistance.
So yeah, the world that I live in, I think, is somewhat different from the world that John lives in that, I spend most of my time thinking about so Dragonfly, the fund that I work for, we spend a lot of our time. We have an office in SF, office in Beijing, so we spend a lot of our time in Asia. And when it comes to crypto, not necessarily blockchain, the majority of crypto usage is actually not in Western countries; it's actually in Asia. Like something 60 to 70% of total volume and activity is nowhere to be found in the West, and which makes sense because, of course, a lot of our financial infrastructure, a lot of our access, a lot of the liberties that we have, we kind of take for granted. And crypto has tremendously better substitutes. If you're living in the U.S., you really have no need to ever go on Ethereum mainnet and like take out a DeFi loan. Like why would you ever really need to do that? And of course, like most people here, pay their taxes. Maybe not on their crypto, but they do pay their taxes. And those, it's a very different world in a lot of the places that I think crypto is really gaining mass adoption and much more of the excitement about some of these crypto native products are coming from over there. So, to me, I see the interesting thing about the Ethereum and any of these platforms is that they kind of, much like the internet, they can support effortlessly a somewhat balkanized set of use cases, right? Where it's sort of like you have the enterprises over here in this corner doing their enterprise thing, and then over here you have like these GeoCities websites that are just talking about fantasy books, and over here you've got the role players, and over here you've got YouTube, and Ethereum is able to support all of these things. But ultimately,
the web is right. I mean, actually, that's the problem, isn't it? I've been getting a lot of pushback lately. What do you say to this about, hey, if anybody can put their loads on this singleton, why am I not going to get a noisy neighbor problem all day long? And I'm like, yeah, ETH2, baby, come on, ETH2.
Yeah. No, that's
we got to deliver. We got 18 months.
Right.
I think we have 18 to 24 months, and if we don't deliver solidly on these promises, we're going to have some trouble.
Do you think we're going to hit that 18, 24 month timeline with ETH2 full?
I say we will machine? Because we have to.
That feels.
It doesn't matter if it's likely. It must be done. My experience says it must be done. Unless we like to go into a slow burn towards heat death or a very cold winter.
John, do you even think we need phase 2? And I guess we should probably define these things as well. But like given your vision, like it seems like phase 1 is perfectly suitable for the data availability on these shards, being able to put all your data there and have those call back to the beacon chain.
Well, again, you don't put the data there. You never put the data on the blockchain. You create very sophisticated proofs.
Sure, yeah, the data might just be a hash of something, right? Yeah.
Or it's more. I think it's more sophisticated than that. It's not just about proof of existence. It's about flow control. It's about saying this thing has to that references this previous thing cannot execute until that thing has been concluded, and that conclusion is done in such a way that all the parties. So you create these little micro consortia, right? You say, I've got this one record that the three of us are aware of and have signed, and we have a proof that that it was done correctly. And then there's another entity, or there's another event later on that references this one that says, I can't post my proof unless the rules in the previous thing I adhered to them, right? So that way you can construct these beautiful compartmentalized without, so siloless compartmentalization is what we need. One of the things I worry about with decentralized finance is, what am I giving up in terms of the ability for somebody with a really good AI to determine some patterns of my behavior? We've seen that, right? I mean, I'm still convinced that Bitcoin was invented by the NSA to catch stupid criminals, right? It's like, oh, let's put something on a public singleton and see if it's private. Terrible idea, right? So if I'm doing lawful things, but things that are highly confidential, whether that's in finance or whether that's in some other part of the enterprise supply chain, you got to ask yourself, how can I do that? And I think we do have the way to do that now, and that'll be rolling out. So that's one thing. The other thing is that, yeah, ETH1 is fast enough for a lot of like supply chain. You don't have to close that event in like a day. Is still faster than you're going to get it if you're doing a PO or something. So I think ETH1 is plenty fast enough for that. But if you tried to do event entanglement on a core banking application, you're going to need to get that speed up. You're also going to want to be able to have shards that say, yeah, we're only doing this one kind of thing over here, and do not put your CryptoKitties on that.
So this sort of touches on a question I had written down, which was Paul Brody wrote on a Reddit thread about their new Nightfall getting transaction costs down. He wrote, "There's much more headroom in 1.x than most people think. I just gave an internal talk this morning about how so many people misunderstand scalability, and that most of the talk about ETH is just fear mongering by the private blockchain crowd." So agree, disagree? It sounds like you agree.
I agree that there's a lot of headroom. I do think that there's not a lot of headroom if you're going to run your actual application on it. Don't do that. It's not for that. It's just a bad tool for that job. Right? We have this amazing technology called a database. We invented it in the 70s. It was cool. And I'm pretty sure that we returned to sanity when Arvind Krishna at IBM one day renames IBM blockchain IBM Cloud Shared Data Services. Right? That'll be then because you know what? I like having a shared data service. That would be cool. My favorite one is called GitHub. But yeah, if I want a really complicated one, I can buy Fabric. But there is utility in having a private shared database for stuff. There's nothing wrong with it. It's not exactly what I've got in mind for the thing I want to spend my time on, but there's utility there. And now it's really a question of, can we get utility out of this, always on internet scale, hard for toll-loving trolls to control thing that we can use to be a common frame of reference for things that need to work together without making a mess.
So you said a phrase that I wrote down: the path to the future for emerging technologies is stepping stones over a stream. So since this is the year ahead, we'll like try to like make predictions. What are some things that you see happening, these stepping stones over the stream? And bonus points if they're spicy and nobody else agrees with you.
John, why don't you go first?
Oh, I think it's your
Spicy
turn.
predictions. Is it my turn? Sure.
Yeah,
Okay.
I've been plenty spicy already, I think.
You have been quite spicy, actually. So I already mentioned DeFi. I already mentioned layer 2. What other predictions would I make? I would predict that. I don't know how spicy this is. I mean, if you asked me at the beginning of 2019 what the likelihood was that Ethereum would remain the dominant smart contract platform, I would guess that it was less than 50%. That it would have that it would ultimately be the winner. And I think that probability has increased dramatically over 2019. And I think it's kind of subtle, and it isn't necessarily something that people have noticed. but there have been, it's sort of like many little armies have come and thrown themselves at Ethereum, and they've all left with their heads chopped off, of like Algorand and Hashgraph and all of these things that were making really loud noises that they were going to be the future, and that what really people needed was scalability, and like they were promising it from day one. And it seems to be the case that even with, when we looked at things like EOS and Tron, you can sort of write them off as like, well, they're not really decentralized, they're not really legitimate projects. With these other projects, it's like, okay, well, you can't really say that these are bad faith attempts at creating decentralized public blockchains, but nothing seems to be working besides Ethereum. And if I were to guess, I think 2020 will be the year that either somebody will overtake Ethereum, or we will give up on this idea that Ethereum can lose. Basically, one or the other will happen. And if we get to the end of 2020 and we see Polkadot and Dfinity and these other folks finally launch their chains, basically people who are not growing the pie but competing for the same pie, which I'd put all the sort of crypto native projects, all the crypto native layer ones in that category. I would say that I think Telegram and Libra are in different categories, where they sort of grow the pie, they bring their own distribution and their own set of developers with them, because they just, they immediately plug into such a massive user base. But for any of these other layer one chains that are trying to compete on the basis of technology, I think 2020 is the year that we're going to call the race. And if Ethereum is the last man standing, then we'll basically say, look, everybody's just going to wait. Like, they're just going to be freaking patient and wait for ETH to arrive, because there's just no other game in town. Maybe if you want to run a little game or some gambling app or some cute little thing at the margin, you might do it on some other chain. But if you're trying to build a real business, whether on chain or enterprise, you're going to go to Ethereum. That would be my guess for 2020.
I actually saw some Bitcoiner wrote in his 2019 prediction piece that EOS was going to surpass ETH in 2019, which
Yeah.
I remember laughing at a year ago, and I laughed even harder when I saw it yesterday.
I think the older I get, I'm 53 now. So as I passed a half century, and that's a weird day, by the way. And you start to do the math on how many of you laid out end to end since the common era. It's like, anyway, so you start to go, oh, crap. You start to see these patterns, these returning patterns. And I think that, there's clearly a merit to the argument that no matter, as long as you meet a certain minimum standard, being at the right place in history in the right moment, fortunate, it matters. And so I saw a really promising protocol the other day, and I'm like, yeah, you got one thing missing. There's one attribute missing. It's called 2015. You needed to be there in 2015, and you might have won. As it is, maybe you should just add these great ideas to ETH2 and be a melting pot. I mean, in an open source world, you'd think that we could fight ideas out at the pull request, not at the protocol level, right? So I'm like, oh, these are great ideas. Let's absorb them, and let's do it fast. And so I think but now that's not a guarantee, because Ethereum has definitely got that attribute of being at the right place at the right time, and with something that was good enough to go on about. But then it's our game to lose if we take too long, or if we show that we're a bunch of knuckleheads that don't know how to organize ourselves. We can lose the game, but it's hard to win the game against us if we're playing well. So we got to play well, and we got to do it right. And that's why, I think we better show that in 18 to 24 months. Game ain't over in 24 months, but we better show a hell of a lot of progress in the next 18 to 24. 18 really, I think. So I think that would be the prediction for me the point of view is that we've got to move forward with things that show people that they can use this state machine safely and effectively. And I should also say that I think I wrote this line years ago, and it's overused now. I wrote this line for my old boss, and I said, "There's no one chain will rule them all," right? The old Lord of the Rings reference. And a lot of people say this, right? And then they say I'm blockchain agnostic. Well, usually I think that's subterfuge usually, but I think really the truth is, if we don't want to have an endless battle at the gates of Mordor, we need to have one chain to serve them all that want to work together in a coherent way. Because again, laws of physics say you need to have a common frame of reference for different state machines to work together. So who's that going to be? And I certainly don't want it to be anything less decentralized than Ethereum. Now, you could argue it should be more decentralized. In fact, Brian Behlendorf makes this case. He's like, hey, I'm an original Apache guy. I definitely have the Kool-Aid. I invented the Kool-Aid, he would say, I think, and rightly so. He did. Kind of a lot of people in those days did, of the idea of anti-centralization. And he's like, I love Ethereum, but it's not decentralized enough. And so my answer to him is, you know what we ought to do is get all the enterprises we know, they're forward thinking, and have a mining pool of known self-identified miners and then stakers ultimately. Enterprise stakers who self-identify, you know who they are. And then what you've got is a network being maintained by unknowables and knowables, such that the knowables make it even harder for the unknowables to somehow take over the network, which is something a lot of CIOs worry about. But at the same time, you can't sue the knowables, because the unknowables, it'd be like suing the internet. For something as base layer as ordering and basically just ordering, that's all it's doing. It's an ordering service. For that base layer, I think it's kind of like passing packets. We need to finally just say, this isn't something we make money on anymore. We pay for it by the SIP, and there's no more profit motive in doing that. And I think that would be a really big deal. And a lot of enterprises I've talked to have been like, well, that would be awesome. I'd love to mine, but our treasury won't let us hold crypto. And I'm like, yeah, you know what you ought to do? Mine and give it all to charity. And you know what? More than a few enterprises, you would be surprised to think, have said, I would actually like to do that. So maybe that's something we see in 2020 is enterprises, an enterprise knowables mining pool where they give all the money to charity.
Do you think we'll see some ETH2 stakers, corporations?
Yeah, I think that companies
like
they're going to need to have gas reserves. Whether that's custodied with somebody or not is irrelevant, because at the end of the day, everybody has to worry about the halting problem, and gas is essential. So yeah, use it.
Do you think corporations will want to keep ETH on their balance sheets? Wouldn't they just like sort of acquire as needed?
Yeah, they'll custodian it until they get really comfortable. In the far future, they'll be fine with it, but we certainly don't want to wait for that. So custodians will be fine.
So mining pools is actually like a good transition to get to the being comfortable enough to be able to hold the relatively small amounts of ETH just to be able to stake it, right? And it's an interesting idea.
So let me extend. I mean, I think that with when you think of the Ethereum mainnet as that common frame of reference, you can start to say, hey, Corda, you have a role to play. You're really good at these financial activities. Why don't you just use the mainnet as a notary of notaries? And it just, not a lot of work. Everything's hard, but it would be a fairly straightforward, hack to do that. Things like EOS seem to be very good at gaming, but I'm pretty sure I don't want it to be the common frame of reference for the internet. But it ought to be able to use the common frame of reference for the internet for things where it needs to interop with other state machines. Right. But you can also say, yeah, my SAP implementation and your Oracle Apps implementation, both state machines need to coordinate when we're doing B2B. We need a frame of reference. Why should we have to go pay millions of dollars to stand up MQ series or some other middleware on a bilateral basis when the mainnet is just sitting there waiting to be used?
So we are getting close to, I think, the question and answer time. So I guess I just wanted to ask if there was, before we go open it up for questions, is there any underhyped thing that's happening and that you think whether in enterprise or not, that you think folks listening should hear about or would like to hear about? And if not, then we'll just open up for questions.
Actually, Evan, I kind of want to ask you. You
Yeah.
you see a lot of activity here in Ethereum. What do you think is the most underhyped thing?
I think the most underhyped thing is like the progress made on phase 0. Like I feel fairly confident it's going to launch. You know, the in Q1. I mean, it's probably like a March, April timeframe right now. And of course, like that's, you know, the beacon chain, which, you know, is a pretty like the base layer of the rest of it. But I see progress happening in phase 1, which I think will, you know, launch those shards and have the data availability, which allows people to build all these layer 2 solutions. I mean, as you were talking about rollup, right? Like we can get basically to a theoretical payment transaction of, you know, 2,000, 3,000 transactions per second using these rollup techniques with the data availability on ETH1 right now. And so, you know, when you go and you take that and you put that on steroids, like the amount of transactions that you're going to be able to get through when phase 1 is live is remarkable. And it doesn't, you know, like as you said, like rollup is, you know, executing it off chain and just having the you know the what is need to verify it on chain. And I think that's going to be a big thing. We're going to see a lot of layer 2 solutions start to be like built, and like the future is eventually as like layer 2, or as John just says, like the internet and using this blockchain thing is, you know, the middleware that I said middleware. I told myself I wouldn't say that.
Magic
The meme is
bus.
spreading.
Together.
No, it's infecting
Yeah.
everyone.
Magic bus is, yeah, I like Magic Bus better.
I
Magic
just
bus
like
is
the
good.
Who song, right? Not the Magic School Bus, the Who song. You're like, oh yeah, Magic School Bus. I'm like, no, Who song. They're like, the Who? Yeah, the Who.
Every time I think about the Who, I think about Boris the Spider when I was 9, because my dad like played that at a soccer tournament over and over again. That was my first exposure to the Who. And as a 9-year-old, I found that song kind of scary. And now I think it's, you know, one of the greatest songs ever.
If this becomes an actual thing, I wanna meet Pete Townsend. That's my goal in life. Too much Magic Bus.
Well, on that note, should we open it up for questions?
Sounds like question time.
Great. So it looks like the first question we have is, John, given your background with Hyperledger Fabric, what are your thoughts around the Hyperledger Besu project being developed primarily by ConsenSys Pegasus team?
Well, so the hardest thing I've done in the last 5 years, among a lot of hard things, was working on getting. This is a true fact. A guy named Moise Kohari and I, he's from LSEG, London Stock Exchange Group. At the time, I think went to State Street, and I was doing another cool thing. He and I had I don't do this very often. We had kind of a boozy lunch, right? We had like maybe one drink or something, and we were like, we should do a foundation. Right? And that was kind of the start of the whole idea of doing Hyperledger, which was originally we were calling it Open Chain, and then it became Open Blockchain because somebody in Europe got the name Open Chain before we did, which bugged me. And then because I like 2-syllable naming, and then we started Hyperledger, and a guy named Chris Ferris, who's a brilliant fellow now at IBM, he's done really well. He and his team, who was really the OSSC, the Open Source Software Committee at IBM, said, you know, you really should use the Linux Foundation. And I spent weeks and weeks on the phone, all like 2-3 times a day with Jim Zemlin from Linux Foundation, trying to get this thing up. And we got 17 companies to join in December of 2015. And it was really hard because we wanted balance. We didn't want it to be an IBM show. And the best thing that a lot of people don't understand about the Linux Foundation is that it's a openly governed open source meritocracy based system for open source. It's not like, you know, even Linux itself is not an openly governed open source project. For a long time, if Linux didn't like it, it wasn't going in. But if you're kid in high school in China and you write enough code that gets merged, you can be a maintainer. And so whenever somebody, and look, my own current team has reasons to pin Hyperledger Fabric to IBM and say it's an IBM fabric. That's patently not true. And nor is it true about Besu. Sure, the Pegasus team is doing a lot of work on it because somebody's got to get it up and going, right? And be the nucleating force for it. I'll be putting out some open source with some friends very soon in the new year, and that's the same thing. But it shouldn't be something where any one party becomes a hegemon. I think that IBM very quickly lost maintainer status for a while on, and did not have a hegemony over the Fabric code base. And at some point, I think we got it down below 50%, non-IBM contributions. So I think we need to be clear-eyed about that and say, maybe you associate it with the name IBM or Pegasus, but you don't have to leave it there. You can be the dominant force in that code base if you put the work in. That's the best thing about Hyperledger. I never loved the name. Blythe Masters named it, and that was her price for being part of it. And that made another member really mad. The R3 guys didn't love the name, and I had to deal with that, and it was super fun. But one thing I do love about the Linux Foundation and Hyperledger is that it's a melting pot, and anybody can join it, anybody can contribute, and anybody can lead.
Great. So the next question we have is noting that they liked someone's comment about one chain to rule them all, and they completely agree. And there was a follow-up question to that. It says, on your association to the law of physics, do you thereby believe the law is immutable?
Cool. Points for whoever asked that.
And that's it. That's all we've got for questions so far. So if anybody else has any questions, feel free to pop them into the question box while we have you.
Anyone? Bueller? Can we ask more questions of Evan? Because Evan is as the DL on everything.
I don't see why not, as long as Evan doesn't mind.
So Evan, bold prediction for 2020. Controversial opinion for 2020.
Controversial opinion for 2020. What is controversial? I never know. You know what? I find that the things I say on Twitter, which I think are not controversial, are the things that end up being controversial. Like if I say anything about Bitcoin governance, I just think I'm stating an obvious fact, and people Bitcoiners get very upset. I mean, my bold claim will be that phase 0 definitely launches in Q1 or Q2.
That is bold.
And that by the end of the year, we'll at least feel about the same as we do right now about phase 0 on phase 1. And I think I think one of the most underrated things in crypto is the degree to which we don't even need phase 2 as much as people think. Those are the execution environments, which will do, all the transactions and allow ETH1 to be ported over. But the things that can be done from phase 0 and phase 1 being up, like finalizing the ETH1 chain so we can reduce proof of work issuance and, stop wasting so much electricity. I think we can easily reduce that by an order of magnitude, which I think is, fantastic. I don't see any reason to waste all this electricity if we don't have to. That's a big one. And then phase 1, just the availability for roll-up chains and for state channels is going to also be, pretty huge. So those are my big takes.
what's something that you changed your mind about in 2019?
What did I change my mind about? Well, I thought layer 2 was going to happen more this year. I mean, I've realized that it is actually harder to, I mean, like for state channels is a good example. We actually, there are live state channels things, right? Like people are using state channels in production, and that's actually not even that hard to do. But, making it into a state channel network is actually quite hard to do. And then abstracting these things away so that like developers can use them in a way that makes sense for them is also quite hard. I think why we've struggled to, quote unquote, see real traction in state channels so far. I mean, I think that stuff is coming, but I was a little surprised that it didn't happen as much as it did in 2019. But there are some cool things being done on state channels. Like eea-eth is a project that they are actually like doing a state channel. They have an ad exchange, right? As you would guess, given the name, and like literally they do a transaction for literally every impression, and they send it out but it's all on a state channel, right? So they claim, like 80 million transactions on a state channel, and we're the most used. Of course, the amount of money is quite small, but they have done a crazy amount of transactions that way. And it is, one of those things that could never really be done until now, which is like, pay people like immediately. That actually reminds me of Stabilier Finance, which is this Paul Berg put out this thing called Stabilier, which is streaming, continuous money streaming. So you're literally paying people by the second. It's not a state channel, but it's sort of similar in that sense. And I think that's an interesting primitive that we'll see people build on.
Is that kind of like Interledger?
Yeah, it's basically the same idea, but it's on Ethereum.
I see.
And it's not a layer 2 thing. It's like literally like calculated on layer 1.
Oh, okay.
Because calculation is cheap, right? Like it's
Mm-hmm.
the state storage that is expensive.
Yeah.
There's an EIP coming out to fundamentally change the state storage protocol, right? So that it'll be super cheap for at least getting it on there. And then the question is how, for how long? I was hearing some interesting stuff about that.
Which one?
I don't know which EIP it is, but
Talking about the call data repricing?
might have been.
Because that just went in, right? Didn't it, into Istanbul?
Yeah.
Yep.
Yeah, and that's what makes these roll-up chains so possible, is that
Right.
it reduces the gas cost on calling into that chain.
And the E&Y guys reduced ZK Snarks costs on Nightfall by 40%. I think it's down to 27 cents a transaction. I think, well, depending on the type, lots of context there, but
Yeah.
that was exciting.
Yeah, things are progressing really fast, and it's also good to see Ethereum really rallying behind supporting what a lot of these layer 2s really need, which so far it's been kind of arm's length, and now I feel like it's really, I mean, Istanbul was like largely about enabling layer 2.
Let's put some plugs in for some things that need work. One of them is a bunch of people better get behind Socrates or something as good or better, and get serious about, needs to be enabled for the enterprise companies, at least in my world, need to be confident that that stuff is stable and strong and not messed up. So there's the Socrates project for the Ethereum Foundation. Man, people should get behind that and put some development time in, some bounties on it, do all that stuff. And the other plug, I guess, would be for the Enterprise Mainnet Working Group for the EEA and the eea-eth. I think let me not announce the name of the new chair but they have been selected, but I'm not certain that it's public yet. But very exciting and very good person. So the mainnet working group is really chugging along. I think we set a record for the first meeting and we seem to be only growing. So.
We have a few more questions. I know that we're coming to time, so I just wanted to check in with you guys and see if you are able to take maybe one or two more questions, and then anything else we can kind of field off offline. Let me know if you guys are okay with that.
Sure.
Okay,
Sure.
cool. So one of the questions is, what do you think of value decomposition, transactions increasing in quantity and decreasing their value? Example, introduction of IoT transactions. What impact can it have?
That's for you, Haseeb. I don't know.
Is that for me? I'm somewhat unclear. Okay, so value decomposition. That's actually the first time I've heard that phrase, but the idea of much higher throughput transactions that are each lower value. The interesting thing about public blockchains is that the like the primary constraint on public blockchains is actually not value running through the chain so much as it is space and compute, right? Like that's actually the finite resource. So the pipes can, the amount that you're transacting is just a number, and the numbers are all the same size because they're, sort of it's with integers. The stuff that takes up the stuff that really clogs those pipes is just doing more transactions with more data. And so I would guess that, Ethereum mainnet, ETH 1.0 or 1.x is never really going to work well for something like IoT transactions, which require many, many noisy, chattery on-chain transactions. That sounds to me precisely like the kind of thing that state channels or that layer 2 would be well suited for, of just an arbitrarily large number of very, very small value transactions, and also a place where the trust model doesn't need to be quite as robust as with two people who have just never interacted before and are likely to never interact again. That's the kind of place where a one-shot transaction on the mainnet is the right trust model for that kind of interaction. Whereas two machines that will be communicating with each other very, very frequently, that's like the ideal place for a bidirectional state channel where we open a channel once, we communicate as many times as we want in basically like the latency of communication in the state channel is literally just point-to-point communication. There's no blockchain, there's no transaction propagation. That sounds like, and maybe this is part of the story of 2020, is us building better mental models and of course better tooling for being able to use the right layer 2 for the right communication structure of what exactly we're doing and how many people we intend to interact with. So that would be my answer to that question. I don't know if that was sufficient for exactly what was being asked, but that was what I got from it.
That was good.
Yeah.
Awesome. So the next question is, what are the odds that the knowable mining pool will take a hold in the next 2 years?
I have the advantage of living always 12 to 14 months in the future. So from where I sit, it's a lovely day here. But I like to write stories from the near future, as some people know. And so it's already happened for me. But I also may live in an alternative universe to yours where it never happens for you. I don't know. So I guess probability space it's a story. I think it's a good story. It resonates with a lot of people, and the story will result in some kind of thing happening here, whether it's actual enterprise knowable mining pools or not. But I'm going to keep telling the story until somebody does the damn thing. So.
Great. So the last question is, can you recommend any recent developments on DeFi valuation models, and where do we stand, and what's your view for a mainstream one being delivered?
A mainstream sorry, can you repeat the last part of the question?
Of course. So it says, where do we stand, and what's your view for a mainstream one being delivered? So perhaps a mainstream DeFi valuation model?
A mainstream
or is it DeFi app?
Or DeFi app, yeah.
Yeah,
Okay.
could be.
I'll answer the DeFi app because I feel like that probably follows more. So a mainstream DeFi app being delivered, like really this DeFi, the protocols themselves, right? they are clearly meant to be abstracted from the user, right? Like early on when people were interacting with Compound or Maker, very, very hard products to use. They had like 13 different steps, and like it was very, very difficult early on to like open a CDP. And now if you use Instadap or Argent or one of these really, or like, Coinbase Wallet, you can just click a button and it opens a CDP for you. And and at a certain point, like, we recently funded a protocol that does on-chain insurance. So basically, let's say I have a compound position and I'm gathering interest on my assets because I don't just want my ETH to be sitting there doing nothing. So I might, well, ETH is probably not the best example, but whatever. You put some assets into compound, you gain some interest, but then you're worried that compound might be hacked. You might also want to get some insurance on that to have a slightly lower yield. But now, if something goes wrong with compound, if there's a bank run or it gets hacked, you're still fine, right? The insurance policy pays out.
Is that the J.J. Abrams reboot of AIG?
Exactly, exactly. So in that,
That worked out well.
in that world, well, so give me a sec. In that world, like again, the actual way that these things are constructed is still pretty complex because there's a complex game that needs to be played around it. Eventually, somebody needs to abstract over all that too, right? Like the story of technology is a story of higher and higher layers of abstraction, such that I don't need to know all the HTTP calls that are happening when I load up a web page. The web page just opens up, and I have this like really simple handle of just I go to google.com and that's it. And I don't care how many requests it's making. I don't need permission for any of them. It figures out what is the right relationship to have with the end user. And so far, we're not there yet. I do think that Coinbase Wallet, Argent, all these applications are getting better. The UX is improving pretty rapidly, but we're still a ways away from that. So as for DeFi valuation models, like it really, really depends on the particular application. What I'm really excited about when it comes to valuing DeFi is not is like instead of what we have today, which is basically you have a bunch of random people writing Medium posts about what they think is the right way to value these things. We have market-based ways of valuing things, right? Which like ultimately at the end of the day, if I write a Medium post saying how I value Apple stock, you're not going to trust that over what's the price of Apple stock today, right? And once you have actual liquid markets, the best form of pricing is one that's mediated by the crowd. And markets are the best ways we know how to price things today. So I would love to see things like Y tokens, which can basically draw out a yield curve for what do we expect to be the interest rate for different assets over time, or for on-chain insurance, for example, right? Like today, we don't really have a good sense of how risky are different contracts relative to each other. Somebody could sort of tell you of like, hey, I think Compound, they have kind of messy contracts, Maker contracts are really clean, but it's all very kind of bespoke, different people's opinions. But once we have on-chain insurance markets for smart contract security risk, then you can actually say, well, look, I don't know how good these underwriters are, but I can tell you how much money they're putting behind the claims that Compound is riskier than Maker, right? And that again is going to give you, as these markets grow and become more liquid, higher degrees of confidence in what do we really mean when we say how risky are these assets. Somebody putting some skin in the game and making a bet on how risky they are, I think is the best way to have sort of a relatively unbiased measure of how risky different things are relative to each other. Now, to be clear, there's always systemic risk, which is very difficult to price and very difficult to evaluate. And all these things are built on top of the systemic risk of Ethereum itself, right? So, of course, if Ethereum has a chain halt or something goes terribly wrong or it gets, all that stuff percolates up the stack, and I don't think anybody has any idea how to price that risk because we've never really seen it before. But I'm bullish on more market-based approaches to being able to value and price these things.
I'll take a crack at the DeFi app, which is one that is sort of related to what Haseeb was talking about, but which is not normally thought of as a DeFi app, which is Augur. I think, if we're talking a year ahead, I think they're going to ship their version 2 in Q1, and they're definitely going to ship it. I mean, I think it's basically ready right now, and I'm pretty bullish on it. And I think like if you look at prediction markets, first of all, I think it's an interesting primitive for enterprise, maybe not in the short term, but like in the medium term. But beyond that, like, I just think that it's going to be a surprise hit, and it's been live for, you know, a year and a half or something, and so people have sort of forgotten about it because it's hard to use now. But they're going to ship a lot of things that will make it much easier to use. And you know, the existing prediction markets, like for betting on things like the election, like the 2020 election, are just not very good. Like Predict It has tiny little size limits, and so there's a bunch of structural issues with it. And I think we will see a surprise breakout hit of things happening on Augur, and you know, surprise, you know, stuff actually works.
Well, I think we can all agree that 2020 is going to be a very interesting year. So here's to Ethereum in 2020.
Mainnet 2020.
Great. Thank you guys so much for your time today. We went over a little bit, but I think it was well worth it. And this call will be uploaded onto the EEA YouTube site, so you are able to share it afterwards. I'll let you guys know when it's up. But I thank everybody in the audience who came and listened. Yeah, so I'm going to adjourn the meeting.
Fantastic.
Great.
Have a good one.
Thanks,
Bye.
everybody.
Bye.
Hey, Evan, thanks for moderating. I don't
Yeah,
know
thanks,
anybody
Evan.
that isn't a fan of yours. You do great work, and thanks for that.
Likewise, John. Thank you.